Only 1 in 3 Kiwis could last more than a month if they lost their job. Furthermore, only 1 in 4 could last more than 3 months. That's a very concerning stat, Michael.
Yeah.
And that's why this is so important.
Welcome to Checks and Balances, brought to you by Partners Life. I'm Michael Vincent. This is James Blair. And today, how to build an emergency fund fast. 5 easy ways to make $1,000.
We're back in your life. And Michael, today we are talking about an emergency fund. Why is an emergency fund important, Mike?
It is important because when things go wrong, you need to have some cash in the bank to make sure that it doesn't trip up your financial future. And notice there, James, that I said when things go wrong, not if things go wrong, because things always go wrong, and relying on short-term debt, credit cards, afterpays, personal loans to get you out of those situations, not a good plan.
Don't be such a Debbie Downer, Mike. It'll all be fine. I think it's just one of those things, right, that we want to think everything will be okay and we want to be able to just put the money into assets that will grow our wealth. But you're 100% right. So, Mike, the obvious question is how much money should I save in my emergency fund?
Yeah, cool. And it depends on your personal situation, right? And I know the listeners always hate it when we say that. Give me some definite answers. But to be honest, this one really does. Generally, it's between 3 and 6 months of expenses. Now, let's say you are PAYE, both salaried employees, you're a couple, you're living in a house, your only real major outgoing is your mortgage, things are pretty stable. Okay, that might be closer to the 3-month end of things. Let's say you are a couple, a little bit later on in life, you have a mortgage, you have kids, one of you is maybe self-employed or a contractor, income's a bit more lumpy. All of that adds up to more cost and a little bit more risk. So what we want to do there is just dial up the amount that we have in those reserve funds.
Yeah, so 3 to 6 months might be a little bit overwhelming. So that's why we want to start with a small amount, right? And the reality is, it's a crazy percentage of Kiwis are just living paycheck to paycheck, even on good incomes. Even if we can get $1,000 put aside, $1,000 will deal with quite a few different situations.
Yeah.
Granted, if you're made redundant, you end up with a really big car bill. It's not going to fix those things, which is why you need that 3 to 6 months. But $1,000 can fix a lot, Mike.
Absolutely. And again, everyone's situation is different. We are not saying that you can save $1,000 in 3 days or something. There's no get rich quick schemes here, but there are general things that you can do to help you save a little bit quicker. So, but before we jump into that, James, a lot of customers always say to me, when we're talking about these emergency funds, Mike, James has told me to save this money for an emergency fund. Can I put it in the share market? What about if I put it on this or that to make a little bit of extra money? And I go, That is not what this is about. This money is just for if you need to smash the glass, break the glass here, pull the lever, get that cash out. You're not thinking about making money off these funds. They just need to be sitting there on call. I basically just say a savings account.
Yeah, and some people go, why would I put my money into something that's making a 1% return, where I could put it into something that make a 10% return or whatever? Can we just be sensible about this and put this into dollars, okay? So on $1,000, you might be making like $10 a year on 1% versus making $20 or $30. And then you have to pay tax on these amounts. It's not a lot of money. The most important thing is that you are setting up for the right structure, that if something does go wrong, you can get access to the money.
So we've covered off what is an emergency fund, rough guide on how many kind of months of expenses you should have in there. We've talked about where you should keep it. You're not trying to make money on it. Don't put it in crypto. The big thing though, James, is Briscoe's got a famous red dot sale on this weekend. Does that qualify as an emergency?
Only once a year. Yeah, look, I think we just have to be a bit sensible with this. It's the difference between, do I need something or do I want something? And that might even be a little bit complicated for some. It's really going, my phone's broken, I need to fix it. I've got a car bill that I wasn't expecting. If we've got a larger emergency fund, I've been made redundant, or my hours have been reduced, or something has happened at the house. I'm sick and I need to go and see a doctor or whatever it might be. It's those big chunky things going, I know I have this cash and I want to use it to buy, go to the Briscoe sales or get a pair of new kicks, and I'll just pay the money back later, that is a very unhealthy relationship to have with money, because you will constantly just be going back and forwards, and then you'll never be getting forwards in terms of achieving your goals. Before we move on, we talk all the time about planning and growing our wealth, but protecting that wealth is just as important. That's why having the right insurance in place can help when life goes unexpectedly.
And that's why this episode is brought to you by Partners Life, a New Zealand operated award-winning insurance provider with over 300,000 Kiwis insured and 89% of claims paid.
Partners Life understand that having some insurance is better than having no insurance. They have flexible and personalized solutions for any budget or situation.
Check out their website in our show notes below.
So we've given the bare bones a bit of a rundown on that emergency fund. Now let's jump into some useful tips. So the big one for me is opens a savings account that you can't touch. And that might mean that your savings pot for this emergency fund is actually at another bank. You know, it may not be at your day-to-day transactional bank. It is removed so that you know I've put a barrier between myself and this money, so I can't just keep dipping into it.
Yeah, for sure. It's just about understanding yourself and going, what's the right thing for you? Because, you know, we all have different money personalities. Some of us, this is really easy. Some of it's really hard. And if it's hard, we have to create the infrastructure to make it easy. The other thing in terms of useful tips is going, well, is there a nice, easy formula in terms of how I split my money so I can know what I'm aiming for? Because it's a little bit like everybody's different. You're sitting over the fence, mate, going, you know, it depends on your situation. People want to be told what to do. So let me give you the 50-30-20 rule. So that allocates 50% of your income for fixed expenses. So housing, utilities, food, transport, all that kind of stuff. 30% for luxuries, and 20% to help you get ahead. So that might be paying off debt. It might be saving for the future. And just remember that 20% is the only component that's helping you get ahead in life, getting you towards those goals you want to achieve.
Our next tip for building that emergency fund, cut costs. Now, I know what you're thinking. You're thinking, Mike, don't tell me to stop having avocado on toast and buying a coffee when I'm out. But to be honest, if you're trying to save an emergency fund and you're starting with that $1,000 mark, some of these cost-cutting measures can actually be really useful, right? So swap some of those Uber Eats, takeouts, eating out for some home-cooked meals is a great way to start. You know, make a grocery list. Don't go to the supermarket when you are hungry. I do that all the time. It never ends up well. Make sure you eat before you go.
2-liter tub of Tip Top boysenberry swirl every time when you go hungry, is it?
The best flavor of ice cream on the planet is Tip Top boysenberry swirl. I will die on that hill. Feel free to blow me up in the comments if you think otherwise. Other one is switch up your supermarket shop. Let's say that you live next to a New World or a Farrow Fresh, and that is a little bit more convenient than driving 5 minutes down the road to the Pack and Save. Maybe think about going to a cheaper supermarket and buying some less expensive brands for basic items.
Yeah. I also think the one around like just doing one shop a week opposed to doing the little shops, which I'm super guilty of.
Yeah.
Like doing all the time. They definitely add up and you get one more thing and one more thing. And then Cooper now will not go past the, you know, where you've got the pineapples and you put the pineapple in and it cuts it.
Yeah.
I have to get a pineapple now every time I go to the supermarket. That's adding, you know, $5 I go 4 times a week. It's adding an extra $20 to my budget, mate. We've got goals to achieve over here.
Yeah.
Sweet. So there's some tips. Canceling subscriptions. Mike, do you agree or disagree with this one?
Yeah, I do agree with canceling subscriptions. Now, the kind of way around that is to share subscriptions.
Netflix doesn't like that, Michael.
Netflix doesn't like that, right? But, you know, let's say your mum and dad have Netflix, your brother's got Amazon, you've got, I don't know, I could rattle off about 1,000. Neon.
Disney.
Yeah, Disney. You know, maybe if you'll just share a couple of passwords, you still get to watch everything, but it's not costing you quite as much.
I think quite a good tip is around checking like on your accounts what you're paying for, because sometimes subscriptions or regular costs go through and they're still going out of your bank account and you're going, I shouldn't be paying this anymore. One of my guilty ones was at my rental property. I've got one of those green gardens bin and it's $5 a fortnight, I think. And somebody stole the bin like over a year ago and I haven't done anything about fixing it because I can't just like send them an email. I have to call them and they're only open in certain hours. So that's my action to beef up my emergency fund.
Just quickly, they are really tough to deal with in terms of customer service. I had to shift my bin from Northcote to Koe. Man alive. And my neighbor had stolen it and put it in front of their house and just thinking that like they could call and change the bin. And they're like, no, Michael, you have to go get the bin, put it up the top of the driveway between this date and this date, and then we will come and pick it up. And I'm like, I don't even live in that bloody suburb. Just go get the bin and bring it back.
You know the most confusing part for me? I've now got 2 of these green bins. Don't even know how it happened.
Anyway, right. So one of our last tips is effectively turn your skills into cash, right? So think about freelancing, offering different services related to your job. And again, we're not talking about going out and getting side hustles here. If you're an accountant and you work 9 to 5 during the week doing your accounting stuff, you've got some free time on the weekends. A lot of accountants will do bookwork for people, just for a little bit of extra money to come in. And that's a great example of utilizing your skills and getting a little bit of cash on the side.
Yeah. Another tip is if you're going, well, how do I get $1,000 quite quickly? Is you probably got some stuff around your house that you don't use anymore. So go on Trade Me, go on Marketplace. I'm sure you'd probably be able to find $1,000 of stuff to sell in your house. And then we've beefed up that emergency fund just like that.
Yeah. And a really good place to look for that is every time people get invited to a wedding, inevitably they end up and buy another dress, another suit, another something to wear. These are not cheap items. People wear them like once or twice. Just go sell them. Someone else is going to love them. You're never going to wear them again.
Yeah, cool. Okay, so a not so fun fact to wrap it up. Only 1 in 3 Kiwis could last more than a month if they lost their job. Furthermore, only 1 in 4 could last more than 3 months. That's a very concerning stat, Michael.
Yeah.
And that's why this is so important.
100%. So if you're listening to this and you're going, I'm going to make some positive changes. It's the start of the year. This is going to be part of my New Year's resolutions. And you think, actually, I know someone who could also benefit from this. Make sure you share the podcast to them. Make sure they review, subscribe, and leave us a comment. And James, wrap it on up for me.
Much love to Partners Life, and we'll catch you next time.
Cheers.